Right now, as we watch the ticker on this Thursday, November 20, 2025, Lithium Americas Corp, trading under the symbol LAC, is sitting at precisely 4.96 USD. We are seeing a downward slide in today's session, with the stock currently off by 0.16 points, representing a decline of roughly 3.22% for the day. If you are watching the charts, you see a sea of red candles, and the immediate impulse for many holding positions in their Fidelity brokerage accounts or Robinhood app is to assume the momentum has broken. The market is reacting with a swift, almost reflexive pessimism, likely triggered by recent filings showing insider sales by key executives. However, if we pause and look past the immediate volatility, the reality of what is happening with Lithium Americas Corp is far more complex and, arguably, far more explosive than a single day's red tape suggests. While the crowd sees a stumble, the smart capital is likely analyzing a massive disconnect between this short-term price action and the tectonic shifts occurring in the global lithium supply chain just this month. The expectation right now, fueled by the headlines you might see scrolling on your interactive broker's trading platform, is that the lithium hype cycle is cooling off again, or that the company's cash burn is becoming a liability. You see VPs like Aubrey Barnum and Timothy Crowley selling shares earlier this week, and the natural human reaction is to pull back. Why would insiders sell if the future was bright? That is the surface-level narrative. But here's the reality that challenges that expectation. The Department of Energy just released the first $435 million tranche of its massive $2.26 million loan to this company in October. This is not just a promise of funding. This is actual liquidity hitting the balance sheet to accelerate construction at Thacker Pass. While the market frets over a $21,000 insider sale, the United States government has effectively backstopped the project with billions, signaling that this asset is a matter of national security, not just market speculation. The tension between these two facts, small insider sales versus massive government capitalization, creates a curiosity loop that we need to examine closely. To understand why this stock is trading at 4.96 USD and not significantly higher or lower, we have to look at the broader context that affects everything from Tesla stock to the battery packs in your pocket. Just days ago, the chairman of Ganfeng Lithium, one of the world's largest producers, dropped a bombshell forecast predicting a 30% surge in global lithium demand by 2026. This prediction sent lithium carbonate futures in China screaming to multi-month highs. If you track these commodities on investing sites or through your Schwab Intelligent Portfolios, you know that when the Chinese market moves, the rest of the world follows. The disconnect here is palpable. The commodity price is waking up. The macro demand forecast is bullish for 2026, yet LAC stock is red today. This suggests we are in a period of dislocation, a time when the price of the equity has not yet caught up to the rapidly improving fundamentals of the commodity it intends to mine. Let's analyze the volume and movement we are seeing right now. The stock is trading with decent liquidity, but the pressure is clearly to the downside. This indicates profit-taking after the massive run-up the stock has enjoyed over the last 6 months. It's up over 70% in that time frame. Investors who bought in the low threes are cashing out, using platforms like SoFi Invest or their individual brokerage accounts to lock in gains. This is healthy, mechanical market action, but it masks the institutional accumulation that has been happening quietly in the background. When JPMorgan upgrades a stock from underweight to neutral, as they just did, and when BMO Capital raises their price target to 5 USD, they are signaling to their high net worth clients that the bottom is likely in. The retail trader on the Robinhood app sees the dip and panics. The institutional algorithm sees the dip and tests the liquidity. We need to talk about Thacker Pass because this is the single most important asset in the Western Hemisphere for the battery supply chain. As of the latest reports from November 2025, there are over 700 workers currently on site in Nevada. This is not a paper project anymore. Steel is rising from the desert floor. Engineering is over 80% complete. The company is targeting mechanical completion of Phase 1 by late 2027. This timeline is critical because it aligns perfectly with the supply crunch predicted by Ganfeng and other analysts. If you own Apple stock, you know how important supply chain timing is. Apple cannot sell iPhones without batteries, and General Motors, Lithium Americas' largest shareholder, cannot sell EVs without lithium. GM has gone all in here, holding a massive equity stake and an exclusive offtake agreement. When you invest online, you are often told to follow the smart capital. General Motors and the U.S. Department of Energy are arguably the two biggest whales you could ask for as partners, and they are both heavily committed to seeing this project succeed. This brings us to the specific business model, which many people using self-investing tools often overlook in favor of technical charts. Lithium Americas is a pure-play developer. They are not mining yet. They are building. This means their financials look terrible to the untrained eye. They have zero revenue and significant net losses. If you look at their Q3 2025 filings, you will see cash burn. But in the mining industry, cash burn during construction is a feature, not a bug. It is the capital expenditure required to build the machine that will print cash later. The recent $2.26 billion loan from the DOE is the bridge that gets them from burning cash to printing cash. Without that loan, the risk of dilution, issuing more shares and hurting existing shareholders, was high. With that loan now active and drawing down, the dilution risk is significantly capped. This is a nuance that automated tools like a robo-advisor might miss, but if you are managing your own Fidelity IRAs or trading via interactive brokers, you need to understand that the risk profile of this company changed dramatically the moment that loan closed. There is also a geopolitical angle here that cannot be ignored. The United States is desperate to decouple its battery supply chain from China. Currently, China dominates lithium refining. Thacker Pass is the answer to that dominance. It is located in Nevada, a mining-friendly jurisdiction, and it uses a unique clay extraction process that is different from the hard rock mining in Australia or the brine evaporation in South America. If this process works at scale, and the pilot plant suggests it does, it opens up a vast new source of lithium. This is why the stock often trades in sympathy with broader American reshore themes. When you see news about tariffs or trade wars, you should be checking your Lithium Americas quote. It is effectively a leveraged bet on U.S. industrial independence. However, we must be realistic and professional about the risks. The insider selling we mentioned earlier, while small in absolute terms, does signal that executives are taking some chips off the table. Timothy Crowley and Aubrey Barnum selling shares at $4.50 suggests they don't see the stock doubling overnight. It's a prudent personal financial decision, but it dampens the moonshot narrative that retail investors on Robinhood crypto forums love to hype. Furthermore, the timeline to production is still 2 years away. Late 2027 is a long time in the markets. A lot can happen. Lithium prices could crash again if new supply from Africa comes online faster than expected. The clay extraction technology could face unforeseen technical hurdles at commercial scale. These are the risks that keep the stock at $4.96 instead of $15. Let's scrutinize the technicals of today's move. The drop of 3.22% is testing support levels established earlier in the month. If it breaks below $4.80, we could see a retest of the $4.50 level, which is exactly where the insiders sold. This would be a technical fill of the gap. Conversely, if it holds here, it establishes a higher low, which is a bullish technical structure. For those of you using the Fidelity trading platform or interactive brokers trading tools, To look at level 2 data, watch the bid-ask spread closely. If you see large block orders coming in at $4.90, it indicates institutional support. If the selling volume accelerates to the close, it suggests that the market is risk-off on speculative assets for the weekend. Now, I want to hear from you. Comment below how many shares of Lithium Americas Corp you currently hold and what your average buy-in price is. Are you underwater from the highs of 2022, or did you catch the bottom in 2024? Also, let me know if you think the Department of Energy loan is enough to secure the company's future, or if you foresee another capital raise coming. Moving forward, the future outlook for Lithium Americas hinges on 3 things: execution, lithium prices, and General Motors. The execution piece is now in the hands of the engineers and construction crews in Nevada. We need to see monthly updates showing that the workforce is growing and milestones are being met.